What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on SENS stock. First of all, as usual, brief information about this company. Senseonics Holdings, a medical technology company, develops and commercializes continuous glucose monitoring systems for people with diabetes in the United States, Europe and Middle East and Africa. The company's products include Eversense and Eversense XL, which are implantable CGM systems to measure glucose levels in people with diabetes through an under-the-skin sensor, a removable and rechargeable smart transmitter, and the convenient app for real-time diabetes monitoring and management for a period of up to 90 and 180 days. And here is their website. You can see it is the transmitter, and basically you can see right here the system itself, three main components, and this is the sensor, transmitter and the mobile app. And it says the world's only long-term CGM system. With the Eversense 90-day CGM system, you can actively manage your diabetes simply and with confidence. And for those of you who just start to follow my channel, let me tell you that in United States they can sell only 90-day CGM system, but in Europe they can sell 180-day CGM system. For now, they are waiting for approval 180-day CGM system by FDA, and it should be done by the end of the year or in Q3 2021. And on top of that, since I made my previous video, we don't have new announcements, but I've seen a lot of concerns about this company. The main concern is that CGM system should be covered by insurance. And only in this case this company will be successful, and otherwise they won't be able to sell enough systems to be profitable. And let me show you this information. It is Senseonics Holdings report, fourth quarter and full year 2020 financial results. And recent highlights and accomplishments right here, and I want to pay your attention on the fourth bullet. Eversense implantable CGM CPT codes were added to the 2021 MEDICARE physician fee schedule, improving national reimbursement payment availability for implantable CGM system and physical services. And of course, this is very good information and it is a very good long-term catalyst. On top of that, let me show you this information. It was published on January 19th, also on the Senseonics website. And it's titled Senseonics announced a positive coverage decision for Eversense CGM from Emblem Health. And let me show you that Emblem Health is one of the United States' largest non-profit health plans. And with this news, let me show you that on January 19th we have this huge surge in price for more than 150%. And basically this information is still legit. That's why I don't think that we might have some issues with insurance coverage. And on top of that, let me show you the medicare.gov website, and right here let me quote you this paragraph. Medicare covers therapeutic continuous glucose monitors and related supplies instead of blood sugar monitors for making diabetes treatment decisions, like changes in diet and insulin dosage. And let me show you this news that was published back in September 2020, and it titled Local Coverage Determinations for Implantable CGMs announced by 3 Medicare administrative contractors. Let me quote you this. Senseonics Holdings, a medical technology company focused on the development and commercialization of long-term implantable continuous glucose monitoring systems for people with diabetes, today announced that 3 Medicare administrative contractors have issued local coverage determinations for the use of implantable CGM systems, such as Eversense CGM system. LCDs are policy decisions by MACs establishing service as reasonable, necessary and eligible for payment by Medicare. And basically this also a long-term catalyst. And despite of a huge decline in price during the past 2 months, we have very good fundamentals behind the scenes to add this company into your portfolio. Let me show you this article. We are on Market Realist, and this article was published on April 15, 2021. And let me show you this information, why SENS stock has dropped. The fall is largely due to the sell-off in growth stocks amid the increase in bond yields. Investors have sold off stocks that aren't making money earnings currently, and their earnings are skewed towards the future. Also, there has been a sell-off in speculative names. So there is nothing fundamental behind this sell-off, and that's why it is just very good discount for this company to add this stock into your portfolio. And all this information leads us first of all to the institutional investors, and right here, since I made my previous video, we have several green lines and one red line, and this sell-off is only $2,000 in value. And as you can see right here, there is a cautious buys, and these companies they hold their position. Majority of them hold their position, and it is also a very good sign for the company that we don't see any sell-offs among institutional investors. And before we dive deep right here in the technical analysis, please subscribe to my channel, hit the notification bell and hit the like button. This helps me a lot. So, since I made my previous video, we have this price action, and we've already broke this support, and basically it is rather bearish sign. But on the other hand, let me show you indicators. Right here we can see a bullish divergence, and what does it mean? It means if we have lower lows on the price with the higher lows on RSI, and on top of that we have higher lows on the MACD indicator, this means that we might have a trend reversal anytime soon. And we have absolutely the same patterns on 3-hour time frame, and we have the same pattern on 2 hours time frame, and even on a 1-hour time frame we have absolutely the same pattern. This means we might hit a trend reversal point anytime soon, and let me show you that we have our next potential accumulation point at 0.786 Fibonacci level. This might be your next potential entry point, or if you believe in this company and you've already done your own due diligence, you can add your position right here, because right here we can see the doji candle. This is a doji candle, and it is an indecisive candle until we have a good candle behind them. So if we will see a good candle with a good volume on next day and it closes above this peak of this candle, this means this candle might be a trend reversal and it might be a lowest point for this price action. And with new data, we have this point lower than this one. We can adjust our targets, and to do so, I pull the Fibonacci extension tool from the bottom of the entire structure to the top of the structure, because we have completed 5 waves, and it implies only the first wave on a greater scale. And our third point of this tool should be at the lowest point of the retracement, and for now we have it right here. And with the assumption that this is the first wave, we have several targets. First of all, we have one-to-one target at $7.16, around $7.16, and next our aggressive target might be at $10.49 price point. And basically I think we might hit it by the end of the year or even earlier. It depends on FDA approval of 180 days. So with that being said, please subscribe to my channel, hit the notification bell and hit the like button. This helps me a lot. See you guys and girls next time. Bye!